So let's talk about one of the most popular tools you'll see on a trading chart, the Supertrend indicator. You look at it and it seems so simple, right? It's just this one line that flips between green and red. But here's the thing. Underneath that simplicity is a ton of strategic depth. And honestly, most traders get it completely wrong. Today, we're going to break down how to actually use this thing the right way.
Here's the game plan for our journey. We'll start with why this indicator is so dang appealing in the first place. Then, we're going to dive deep into the #1 mistake that crushes most traders who try to use it. After that, we'll build a much smarter strategy from the ground up, look at some advanced setups, and face the hard data on when this indicator just, well, fails. And by the end of this, you'll have a complete framework you can actually take to the charts.
All right, first up, what is it about the Supertrend that pulls so many people in? I mean, think about it. Your charts are probably cluttered with all sorts of lines and oscillators, right? The beauty of the Supertrend is its sheer simplicity. You just drop it on your chart and boom, you get this clean, color-coded line that seems to tell you everything you need to know. Are we bullish or are we bearish? It just feels right.
Okay, so what is it technically? Well, the Supertrend is what we call a trend-following indicator. It was actually developed by a guy named Olivier Saban. Its whole job is to lay right on top of your price chart and give you a really clear, at-a-glance read on the main market trend. Green line below the candles, that means we're in an uptrend. Red line above them, that means we're in a downtrend. It's really that straightforward.
But how does it actually draw that line? Well, it's not magic, it's just math. The indicator is built on two key ingredients. First up, it uses something called the average true range, or ATR, which is just a fancy way of measuring how wild and volatile the market is at any given moment. Then, it takes that volatility measurement and multiplies it by a specific number, which is usually set to 3 by default. Those two things work together to calculate exactly where to plot that dynamic red or green line.
All right, listen up, because this next part is absolutely critical. The indicator might look like a simple buy when it's green, sell when it's red switch. But I'm telling you, treating it that way is the fastest ticket to blowing up your account. This is the hidden trap that gets almost everyone when they're starting out. You know, this quote from trader Ezekiel Chu just hits the nail on the head. He says the Supertrend was never built to be an entry trigger. It was built to give you permission. A green line isn't screaming, buy now. It's quietly saying, hey, the market is bullish right now, so it might make sense to start looking for a good reason to buy. That's a huge mental shift.
So what happens if you ignore that advice? This is where you fall right into the trap. When the market isn't really trending and is just bouncing around sideways, what we call a choppy market, that indicator is going to flip and flip and flip. You'll get a green signal right at the top of the range, so you buy. Then, price drops, it flips red at the bottom, so you panic and sell for a loss. You get completely whipsawed, and your account just bleeds out from a dozen small cuts.
So how do we avoid that trap? How do we fix this? Well, we build a smarter, multi-layered strategy. And the foundation, layer #1, is all about getting the right permission to even think about placing a trade.
The first rule is absolutely non-negotiable. Trend before signal. That's it. Before you even glance at that little red or green line, you have to zoom out and figure out the bigger picture. Is the market in a major uptrend or a major downtrend? Once you know that, you only, and I mean only, take Supertrend signals that agree with that dominant trend. Any signal that goes against it, you just throw it out. It doesn't exist.
Okay, so how do we do this in the real world? A really powerful and simple way is to use a trend filter. A great one is the 200-period exponential moving average, or EMA. The logic is dead simple. If the price is trading above that long-term average line, we say the market is broadly bullish. So we only care about green Supertrend signals. And if the price is below the 200 EMA, we only pay attention to the red signals. Just by doing this one thing, you've probably filtered out half of your potential losing trades. Seriously. All right, so we've got our green light from the bigger trend. What's next? Well, now we need to add 2 more layers. Finding a really high-quality entry point, and then, just as importantly, managing the trade properly once we're in.
This is where we go from being an amateur who chases the price to a pro who lets the price come to them. Instead of jumping in the second the line flips color, the smart approach is to wait. And yeah, this means you have to be patient and fight that fear of missing out. You wait for the price to pull back and actually touch the Supertrend line. In an uptrend, that green line acts like a moving floor of support. In a downtrend, the red line acts like a moving ceiling of resistance. This is a much higher probability way to enter.
But just touching the band isn't quite enough. We're looking for what traders call confluence, where a bunch of different factors all line up and scream the same thing. So here's our checklist. First, location. Does the price pull back and touch the supertrend band? Check. Second, structure. Does that exact spot also line up with a major horizontal support or resistance level from the past? Check. And third, confirmation. Do we see a specific type of candle, like one with a long wick, showing us that buyers or sellers are jumping in to defend that level? When you get all three of those things lining up, boom. That's not just a trade, that's an A+ setup.
And once you're actually in the trade, the Supertrend gives you a fantastic way to manage your risk. You see how the line doesn't just move diagonally? It often forms these flat, horizontal shelves. Well, those shelves are the perfect place to hide your stop loss. So you enter your trade and you put your initial stop just on the other side of the most recent shelf. Then, as the trend moves in your favor and the indicator prints a new, higher shelf, you can move your stop loss up right behind it. It's a brilliant way to protect your capital and lock in profits as you ride that trend.
Okay, so we've built this awesome framework, but let's be real for a second. No indicator is a magic bullet, and no strategy works 100% of the time. It is so important to understand the limitations of your tools, and the best way to do that is with cold, hard data. So let's get a little reality check.
So, the YouTube channel Trading Rush did a backtest of 100 trades using a supertrend strategy. In a market that was trending beautifully, basically under perfect conditions for the indicator, the strategy had a win rate of 57%. Not bad at all, right? That's definitely profitable and shows you what this thing can do when the market is cooperating.
But now, look at this. They tested the exact same strategy another 100 times, but this time in a choppy, sideways, ugly market. The win rate absolutely plummeted, all the way down to 36%. Now, for this particular strategy, the break-even win rate was about 40%. So at 36%, you're not just failing to make money, you are actively and consistently losing money.
And when you look at these two numbers side by side, the message is crystal clear. The success or failure of a supertrend strategy is completely 100% dependent on the market environment. It is a beast in a clear trend, and it gets absolutely shredded in a choppy market. This means your number one job as a trader is figuring out what kind of market you're in right now.
So what's the bottom line here? The Supertrend is a lagging trend-following tool. What does lagging mean? It means it's reacting to price action that has already happened. That's what makes it so great for confirming and riding a trend that's already in motion. But it's also what makes it so terrible when there's no trend to follow, because it's just reacting to random noise. All right, let's bring it all home. We've talked about the good, the bad, and the ugly of the supertrend. We've gone from the simple signal to the huge mistakes to the advanced layers of a real strategy. Now, let's put it all together into one complete, cohesive framework that you can actually use. Here it is, your 4-step checklist. Number 1, permission. Look at your 200 EMA. Are you even allowed to be looking for a buy or a sell right now? Number 2, execution. Don't just chase a color flip. Wait patiently for that high-probability confluence setup, the band touch, the key level, and the confirmation candle. Number 3, management. Plan your trade. Know exactly where your entry is, where your initial stop loss will go based on the supertrend shelf, and how you'll trail it. And finally, number 4, which is the most important of all, context. Step back from the chart and ask yourself honestly, is this market even trending right now, or is it choppy? Am I using the right tool for the job? Answering that one question will save you more money than anything else.
And that's our deep dive on how to use the Supertrend indicator like a pro. It really is a fantastic tool, as long as you respect its strengths and, more importantly, its weaknesses. Now, I want to hear from you. Do you use the Supertrend in your own trading? What's your experience been? Do you have any secret sauce you add to it? Maybe a different filter or indicator you pair it with? Drop all your thoughts, tips, and experiences in the comments below.